Hi ladies and gentlemen, this is Game of Trades and this is going to be a technical analysis of the natural gas futures. So if you haven't been following natural gas, it has recently begun an uptrend, which is something that we actually have been waiting for a while, since around the beginning of 2019 here, end of 2018. We were in a fierce bear market, a fierce downtrend in natural gas, and we had seen signs of a potential reversal, and we did get that, and recently we did begin the uptrend that we were waiting for. And this actually conforms perfectly to the typical seasonality that comes with natural gas, and that is the downtrend during the summer months. You can see during March, May, June, July, we were in a downtrend, and now approaching the winter months, we are starting to recover, and the price is starting to rise again. So it's nothing unusual, nothing unexpected, and it actually makes things a little bit more, a little bit easier in the technical analysis. So in my last video, I talked about the island top reversal pattern that we saw here at the top of this huge rally. You can go back and check in my videos. It's called Island Top Reversal, and I talked about potential downside in natural gas. I had two targets aligned, with my first target being the minimum target, and we did hit that. It was the 2.5 level here that we just recently hit. So that was a nice quick profit. And I did have a second target here at 2.3. I had a little bit less conviction with this target. We haven't hit it just yet, and I'm not so sure that we will. I'm starting to see signs of a potential reversal in the short term in natural gas. So I'm going to go ahead and cancel that target, put a stop to that trade, at least on my end. And that's what I'm going to discuss in this video, the potential reversal in the next few days for a nice rally again in natural gas, hopefully like the ones we've seen recently. Now, the first thing that I want to address is the Fibonacci retracement levels. Fib retracements are something that I use a lot in my trading. They help me trade with a trend. So when a stock or commodity is trending in a certain direction, whether that is up or down, you'll always have counter rallies or counter corrections. I'm going to show you what I mean here. You can see natural gas was in a downtrend during this entire time, during the summer months, and we had counter rallies along the way. And fib retracements are designed to actually measure these counter rallies. We're trending up right now, and these are the counter corrections. And you can actually measure these with fib retracements. So you just measure the rally from bottom to top, and it'll give you the fib retracements. And these are actually color coded, and the greener ones are the more probable counter rallies, and the more you go down, the less it's likely to have a counter rally that big. I'm really oversimplifying things right here, but these actually help you pinpoint potential reversal points for a counter rally. So you can see that we're approaching the 61.8% Fibonacci retracement level right here, and that would actually be a nice support level. These can act as support and resistance levels for natural gas, so we can really bounce up from this retracement level. So this is the first thing that I want to address, the fact that natural gas is in an uptrend, and we have had a counter correction right now, and we're currently approaching the 61.8 retracement level, which would be a potential reversal point for natural gas if we want to continue on heading higher. And obviously this would actually confirm that UGAZ is still in a uptrend, considering that it has a plausible counter correction that's still within the green. Now the second thing that I want to address is the MACD. I'm going to go ahead and eliminate this. So the MACD, you can see this is the daily chart. We've been swinging up and down here above the zero line. So what does that mean? That means we are in an uptrend. Now you can see that we are actually back testing that zero level right here, and that would actually be a very interesting thing to see if we start reversing off of the zero level on the MACD. It would confirm the fact that we are in fact in an uptrend. And you can actually look back, and if you've seen my videos, I've talked a lot about this. This is an interesting concept with the MACD. The zero line does act as a support and resistance, and you can see this in this downtrend here. Every time the MACD starts to head on to the zero line, you can see it reverses right off the zero line. Same thing here again. We have the counter rally, and it reverses off the zero line. And you know, it works sometimes extremely well, sometimes a little bit less. But with natural gas, in my experience, this is actually a pretty effective way to identify potential reversal points. So you can see we're starting to head here to this zero level, and could really act as a support level. Just like the retracement level would act as a support level, so does the zero line on the MACD. So that's the second reason I am more bullish on natural gas right now. Now something else I see on this chart is the fact that we're actually starting to hit some pretty nice support levels here, and you can see that this level actually has many reactions here. 2.48 right here again, and we're starting to slow down right at the same level again. So this would again be a objective entry point to long, because that is actually a basic rule in technical analysis, that you can go long at support and you can short at resistance, and buying now would actually be going long at support. Something interesting that I thought of when looking at the charts is that we are actually backtesting this support level that we were trading at, above throughout 2.5 years of trading in natural gas. And so what I see this as is actually a backtest of this extremely strong support level, and this would actually confirm that we are back into this trading range and that we are able to head on higher. Now obviously it doesn't have to be pinpoint exactly on the level. You can see there's actually many support levels along. This would be more of a support zone, so it doesn't have to be extremely precise. In fact, if we undercut it a little bit, it would actually squeeze some shorts and would provide a stronger counter rally once we start heading back up. So that's something to note. The fact that we're that we could definitely bounce off of this extremely strong support level on natural gas, that is without a doubt putting the odds in our favor to be long at this particular moment. Now the last thing that I want to address on this video is actually on the hourly chart, and that is the fact that we're actually building some divergence on the hourly chart. And this is actually what mainly made me change my mind about more downside. Usually when you start seeing divergence being built like this on the hourly chart, it means that the price is starting to contract and it won't go much lower. There's limited downside left, at least in my opinion, and it actually points us to a potential reversal in the next few days. This is extremely short-term divergences, so I definitely think this is telling us that natural gas is getting ready to bounce off of this support level, bounce off the retracement level, reverse off of the MACD 0 line. You know, to me, everything points in the same direction, and I definitely think that we have more upside left on natural gas. And obviously, the first target that I'd put on is the 2.9 level. That would be a fairly safe target. We could definitely go above that, but only time will tell. I guess I'll have to make another video as we start going up. But definitely the $2.9 level is a good first minimum target, at least for me. So that's about all I wanted to say on this video. I hope you guys enjoyed. If you did, make sure to like and subscribe if you haven't already. In the meantime, good luck on your trading and see you next time.